Good morning to all traders and welcome to our daily market insights video provided to you by Orbex. Safe havens run out of steam across the board, with gold recording a deep, steep decline that could shift sentiment to the downside once again. While the European elections near, markets seem to have discounted May's plan to offer a second referendum option to MPs, and all that as Trump versus Hawaii drama settles down. Now, regardless, downside risks from the US-China trade war after China's retaliation has kept oil prices around the $63 per barrel. But yesterday, following OPEC meeting, WTI declined lower. Media sources said that OPEC Plus are considering increasing production. Now, on top of that, Trump also said that a China trade deal cannot be a 50-50 deal. So that is also rising global economic slowdown fears further. Now, on the economic calendar today, we are expecting ECB President Draghi's speech. We have the inflation CPI and PPI also figures from the UK, retail sales from Canada, FOMC William Bostic speaking, as well as the FOMC meetings later on the night. And of course, the EIA crude oil stock exchange for the week ending 25th, is it? For the week ending 24th of May. Of course, I've already spoken about gold and oil, and this is what I want to talk today about. I want to start with gold, 240. We've talked about this being the correction, last wave C, and then we'll be looking prices to start moving higher. And that is now not the case, of course, after this big steep decline over the past few days. So we are still looking at this as an A, this as a B, and this down here as a C wave to complete the correction. Now, going down to the first wave of this impulse wave to the upside, we could be looking even at 1243 in the medium term. Okay. Now, a little bit closer though, how I see this is as a double zigzag. Okay, so we've got the ABC here, and then we've got an ABC here, and then we're looking for an impulse to the downside, a correction, and then another impulse to the downside, where we could also see the end of this ending triangle pattern. Okay, and from here is where we can start looking for prices for bulls to step in. Now, if we go a little bit closer, be able to understand what's happening here in the short term. So we've had an ABC correction, ABC correction that is normally followed, that is indeed followed by an impulse wave. So from here, because we're still looking in this as a corrective wave anyway, what we are looking for now is the end of this impulse wave down here. Might have ended, but possibly not, because normally we see prices going down to previous lows over here. Okay, what we will be looking is we'll be looking for a short retracement, for a correction. Okay, on the gold. So sooner or a little bit later, we should see prices moving higher for a correction, and from here is where we start another impulse wave to the downside. Now, 1266 is our first target, but because I doubt that this is going to end like a flat, most likely we're going to break below that level. But of course, we can expect prices to retest, then start the impulse to the downside, and this is where we should be receiving further signs for the oil. Okay, so short term, I'm expecting a retracement. Could even see this top trend line sending a message to the bulls. Okay, now down on the oil, again on the 4-hour chart. I'm sorry. Yes, it's 240. So 4-hour chart. Here we are looking. This is the end of wave the first wave as well at around 58. We have wave 3, 4, 5, ABC. This is where it ended. Indeed, we are now again in a corrective pattern. Okay, so this is my first correction, correction within the correction, and now this is wave C. Now, if this ends as a flat, which again I doubt, we could see prices moving down to 60. But there are also chances that we are going to go lower to 57, 58. That is the wave 4. Okay, and of course also in the longer term, there's chances that we break even below that, because sometimes first wave A is supposed to actually correct down to wave 4. Then we go back to sort of have a failed attempt to break above, and then we move below that level. But we will see how that forms in the near future. A little bit closer now, we've had the first wave to the downside. This is a correction. We're looking again at a zigzag pattern, okay? Now, we could have the end of the zigzag over here, or that could end as a double zigzag, okay? If that is the case, then we could be looking for prices to form some pattern like this. So that would be the first ABC correction, and that would be the second ABC correction over here. So prices may go a little bit lower and then move higher, and from here we can start looking for sales. Okay, now if we go closer, we can also expand a bit on the first scenario. The first scenario looks as this as an ABC, and looks as this wave as an ABC, which is finishing here. Okay, so in the longer term, this is what is going to happen, most likely. So we're looking now, after this impulse to the upside, we're looking at prices at moving lower. We have reached a level near between the 1561 retracement, and from here, what we want to check actually is this, if this level is going to break. Okay, now if prices move below the first wave, okay, so below the 62.40 or so, then we're looking at this zigzag ending here, and prices should be able to easily move down to 61.50 and below, at least for a flat correction near 60 level. Okay, so I will pay attention again today on what's happening in the EIA. With the EIA report, it's very critical for prices of oil, and what's happening around Brexit, the noise between US, China, Hawaii, as well as news from Theresa May, because these political events are definitely going to affect the prices of gold. Thank you for being with us for another day. If you like our video, hit the like button. I would recommend that you always keep an eye on our blog. It's where we'll cover the latest ideas, publish trading, publish all the news, and provide all the necessary tools a trader needs.